Hi, and welcome back to day 3. I'm Chris Adams, the food bookkeeper, and today we're talking about why entering sales is so important. Well, actually, all week we've been talking about that. We are going over each day the top 5 criteria to enter sales. Day 1, we talked about the importance of the chart of accounts. Day 2, we talked about what did we talk about? Why you should use a sales journal entry versus a sales receipt. In day 3 today, we're talking about accrual accounting versus cash accounting. So accrual accounting, meaning that revenue is recorded when revenue is earned, versus cash accounting, which is revenue is recorded when payment is received, so the cash part. For expenses, for accrual accounting, expenses are recorded when expenses are incurred, or on cash basis, it's when it's actually paid. So there are 2 types of accounts that are in the accrual accounting that are not in the cash, and that is accounts payable and accounts receivable. And when I say those 2 terms, I just mean for accounts receivable, it's revenue that has incurred but just not received the cash yet or collected payments. And accounts payable is, say, services it has incurred but payment hasn't been made yet for those services. So that's pretty much the difference. If you go into your QuickBooks file, click on the wheel that's in the top right-hand corner, then click on Account and Settings. On the left-hand side, you'll see an Advanced tab, and that's where you can see if your restaurant is set up as accrual or accounting. So that's how you can tell in QuickBooks if it's set up that way. There is a phrase that I've always seen for accrual accounting. It's called earn, owe, use. And what that means is you earn, means all the sales that was collected or not are recorded the day that they happen. Now, again, this is in accrual accounting. So for a restaurant, this is perfectly makes sense because this scenario happens every day. The revenue that is incurred is also the money is received. So you are paying for your meal the day that you're eating your meal. So that's easy enough. The O part of the phrase, meaning OWE, is that anytime, say, a service comes into your kitchen, say a plumber comes into your kitchen to fix your pipe, burst pipe or kitchen drain, the day the service is conducted is the day that the service should be recorded into your QuickBooks. It's not the day that you finally pay the bill, say net 30, so 30 days after. You don't record it the day you pay the bill or the day the money is cashed. You record it the day that the service has come into your restaurant to fix the plumbing. And then the last part of the slogan is use. And what that means is basically what you use is what you record. So for instance, if you are, say for instance, there is a order for chicken wings, you are recording what you're using to make that chicken wing dinner. So if you use a pound of chicken wings, if you use blue cheese dressing and you use celery sticks for that plate of chicken wing order, that's what you are basically recording. Now for a restaurant, you know, you're not just doing single meals. So if you're using a whole case of chicken that one day of sales, then that's what you record. But you're not recording the whole, if you ordered 8 cases of chicken wings that week, you're not recording 8 cases into your QuickBooks. So that's where the inventory section comes into play as well. You want to make sure that you're keeping up on the inventory weekly, at least, you know, definitely monthly, but it's good to have your inventory always up to date so you know what you are using for your in your QuickBooks or in your restaurant to recording QuickBooks. So any questions with accrual accounting, let me know. Again, we really recommend any independently owned restaurant should be using accrual accounting for their financials. So any questions at all, please feel free to email me using the contact information on your email that you receive each day. And I look forward to speaking with you on Thursday, day 4, where we'll cover the different sales components on your POS reports. So very interesting. We'll talk to you then. Bye-bye.